Warning. Listening to this show may result in increased levels of inspiration, motivation, and innovation. Side effects can include the immediate urge to take massive action to build a better business and life for yourself and others. You've been warned. Welcome to Influencers Radio with your host, Jack Mize.
And welcome back to Influencers Radio. Today, I have a very special guest because it's around, a topic that so many people are interested in. There's a lot of controversial aspects around this because it comes to finances and investing. And you could probably flip through the channels of, if you have cable, basic cable, and every other channel is someone that has the way to invest, or you see a lot of big financial management portfolio firms out there that, to let us take your money and make decisions for your future. But there's a lot of folks out there in corporate America, people that have saved, people who have done the right things with their money and have trusted it with folks that are in that business. And, it's not even that they may be losing money, but the fact is they're just not seeing their money work for them. And they've made a decision that it's time to take control of that. It's time for them to understand what the principles are behind making their money work for them, and to understand why it may not be growing to their expectations. And so today, my guest is John Nguyen. He is the founder and the creator of John's EMINI, and we're going to talk about what that is in just a second. But the bottom line, what he does is he helps folks to become successful traders. And when I say this, I'm not talking about he teaches people that, going to be stockbrokers. I'm talking about regular people who have saved their money. They've done the right things. They've done what they thought they've been told to build up a portfolio. And now they're ready to take control of that and learn how to successfully manage that themselves and trade themselves. And it can be a scary time, and it can be a scary decision. But the fact is, what John does is he helps people navigate through that, and he helps people understand what it is that it takes to be successful, and that it's the big difference between calculated risk and just flat out gambling, which a lot of folks think that they may be doing, and they take this into their hands. So, John Nguyen, welcome to Influencers Radio.
Thank you. Glad to be here, Jack.
So, let's start off with, let's talk about what John's EMINI is, so we can kind of get the foundation of that. And when I say EMINI, I'm talking about EMINI. Let's start there. What is that?
EMINIs are electric miniature contracts. It's a method of trading where you can bypass some of the day trading rules that are known out there. Not to get into day trading too much, but basically what I do is I teach my students how to recognize how the market truly moves, how it truly works, so that they can understand exactly what they're doing when they attempt to make a trade.
Well, I think that right there is important. Teaching students about the market, how the market moves, why the market moves, because a lot of the people that come to you are folks that have money in with these big portfolio managers, people that they say, give us your money and we'll manage it and we'll, work to these goals, right? And what they're seeing is those goals aren't really being reached or even coming close to being reached. And the fact is, the way that the financial, market works a lot of times is a lot of these companies, they make money whether you make money or not, right? So let's talk about the foundation of that when folks have their money with someone managing their portfolio, a lot of people think that, well, my success, their success is based on my success. And that's not the case, is it?
That is not the case at all.
So how does that work? What typically, if someone's going to a broker or someone to manage their portfolio, how exactly is that money made? And what's the basis of the decisions of when and where things get traded, how that happens?
Well, there's different strategies that fund managers will use to advocate trading, but they, like you said, they make money on the commission side. So a lot of times they're making a lot of money because they're pulling a lot of transactions in your trading account, and your account's just not going anywhere, but somehow you keep feeding the broker his commission. So what I do is I teach my students how to recognize, again, how the market moves so that you can actually understand why and where and what those fund managers are actually doing with your money, rather than just hoping and praying that they know what they're doing. You can actually literally sit back and see whether they know what they're doing, because you are now educated enough to know what they're doing. But rather than letting them do it at that point, you might as well do it yourself.
Yeah, and you know, that's the thing that's remarkable to me is how many people that have built up a fairly big portfolio, you know, a substantial portfolio that really has the opportunity to make a big difference in their future. And their strategy is to cross their fingers and hope they pick the right person to make these decisions. And so, you know, when your clients come to you to learn how to do this, you know, one of the first things people think is, okay, so I move my money from here to one of the, you know, $10 trade companies, and then I can just start, you know, making decisions. And they, you know, some people start by listening to the radio or watching the latest financial guru on TV, and they just start clicking buttons and hoping that that strategy works, right? And they think that's taking it into their own hands. But in reality, it goes much, much deeper than just kind of listening to some advice and making that decision that day and hope it works out, right?
Absolutely.
So,
absolutely. It's a lot similar to athletes. You hear about commentators saying this guy has all the talent in the world to be the greatest football or basketball player, but he just can't put it together. So you may know how to execute a trade. You may know how an option works or something like that, but you have raw talent, which is typically just enough to get you in more trouble.
So really, oftentimes it's still hope, but it's a different form of hope. At least now they're making the decision themselves, and they're hoping that they are making the right decisions. But when you go into the fundamentals of this, and first of all, I want to make sure everyone is clear on the fact that you're helping people become successful traders, and that doesn't mean that you help people bat 1,000, that every transaction is going to make money. And that's one of the things that I really, you know, like about what you're doing and you know, look at you as an influencer, because you have reality-based education. You know, you're truly an advocate for their success. And one of those things is to let them understand that doesn't mean that every trade is going to be a profitable one, but because of the fundamentals and the principles that you have, it's a sound system that, you know, given time. I guess, you know, one of the things that we talked about when you're educating me around this, and I'm looking at this is if someone, you know, the difference between gambling, you know, going to Vegas and trying blackjack and just kind of going with your gut versus actually learning, you know, set rules that you have. So talk about that, about your rules, because a lot of people, they get very emotional when they making trades, and they end up thinking, man, I should have done this. I could have done this. When you follow rules, you can kind of remove emotion from it and make logical decisions around that. And I think that's a very important distinction. Kind of talk about the difference in what you're teaching is between people making those gut, you know, decisions versus making very logical decisions.
Right. So once they understand how the market works, then rules are placed around those. And everyone's going to slightly vary on their rules. And what I mean by that, and you brought up blackjack as a great example. If anyone's played blackjack, if a simple dilemma that comes up quite often is when you're sitting on 16 and you're trying to decide whether you should take a card or not, and because the dealer's sitting on a 7 or higher, which if assuming that they have 17, so they're going to beat you. So it doesn't matter what you do in that scenario, but you want to have a rule in place. Either you're always going to take a card in that scenario, or you're not going to take a card in that scenario. But either way, you have to stick with your rules. It's when you flip-flop back and forth where you say, oh, I'm going to hit on this 16, and then on the next 16 you don't hit, you're being inconsistent. And therefore, that's what gets you in trouble, because you're going off with gut rather than off of your rules.
Right. And that's why, you know, if you've ever seen anything on people that are professional gamblers or anything, especially on blackjack, they never wonder what they should do. They never have to sit and think about what should I do on this. They're making their decision based on what they see happening at that moment. So they're, I guess, indicators. And I guess that's what you help people do in the stock market is they never have to wonder what they should do in this situation, that they see that this is occurring, and, this is happening now. So the best decision, the most statistically best decision to give you the highest expectation for being successful in the long term is to do this. No wondering, no ifs, ands, and buts. That's what you should do based on these parameters. Is that accurate? The way I'm describing that?
You nailed it right on the head.
All right. Well, perfect. So, that's how easy it is for you to be able to explain it to me, because it made sense, because you see things, especially on, these infomercials, and I'm sure people have seen ads with what I call the black box system, right? Where it's you don't have to do anything. You don't have to know anything. When we're going to give you a green signal, that means you buy. We're going to give you a red signal. That means you sell, and you're blind to everything else. And, when I initially started talking to you, I was thinking, well, I wonder if this is where I don't have to know anything. He just tells me what to do. And you actually have some strong opinions about that's something that is, may not be the best way to do that in the long run or even the short run.
No, you're right, because it just doesn't. It can work temporarily, but it just doesn't work in the long run, because what they're trying to do is they're trying to turn you into a robot. And a robot is good in some instances, but not in the market, where the market isn't simply going up or going down. There's a lot more to it. So if you want a red light, green light system, you have to compare it to a red light, green light situation. If you're sitting in a car and you're sitting at a red light, well, if it turns green, a robot would just simply go. They would hit the gas and go. Very simple. But if it turns green and there's a car sitting in front of you, can you go? You're supposed to go. The robot would go. But if you do go, you're going to crash. Well, not every green light makes sense. It just doesn't make sense. You have to be able to recognize that.
So that really is one of the differences that I saw when you're talking about, teaching, educating people on becoming better traders, that it's not a black box kind of signal based thing, which a lot of, people, they may think they want, but in reality, it's not going to be the best thing for them. It's still, they're basing it on hope. I hope that this thing is going to, teach me the right way to do this. But the way that you do it, to be able to recognize and educating people on really the principles behind this is something that I think, obviously an educator investor is going to be a more successful investor. Going back to you're not going to bat 1,000. You're not going to hit it every time. But let's talk about the ratios, if you will, of kind of what your target is with someone that's, applying these principles over time, where, people that are guessing, if they're really lucky, they may guess right half the time, guess wrong half the time. But you have more aggressive and realistic expectations when you're basing this on educated, logical decisions. So what do those numbers look like?
Well, without going into too much detail, it's kind of a 3-to-1 ratio. So number one, we always keep our risks very small. We want to keep those manageable. But in order to justify taking any type of trading opportunity, we have to be able to see the 3-to-1 ratio on it. So therefore, if you are only batting 50%, then if you're winning 50% of those, you may lose 1 point on 50 of those trades, and the other 50 you're winning 3 points. Well, naturally, you're ahead of the game. So yeah, batting 1,000 is impossible. Anyone who promises that, obviously, you need to think twice about it. I mean, you look at baseball, if they're batting 300, that's phenomenal. And so we teach you to understand that you're not going to win every trade. But when you win, you want to make sure that your winners outweigh your losers as far as compensation.
Right. So that's when, when you talk about teaching folks how to become a successful investor, that's what it means. It's over the term that they're going to be successful in what they're doing, not you're going to be the unbeatable investor or the investor that never loses. But losing is kind of relative. It really is, it takes one to make three. you're ahead of the game. And I think that's a far more realistic, especially when you're making it based on decisions that, are, logical decisions based on what the actual market is doing. So let's talk a little bit about, how you actually do this, because what's kind of unique that I find in what you're doing is it's not a book. You're not, sending them a book on here's what to do, when to do it. Or it's not like you see some of the guys that are on TV, throwing out their theoretical suggestions on what to do. Folks actually get to see you real time as these are happening, because a lot of people, when they base their success over past performance, and it's easy to skew past performance, right? Because you have all that data, but they're seeing you real time, as this is happening, not here's what you should do based on what happened last week and what I did. This is here, what's happening right now. Talk about that kind of method and what the folks that work with you are getting to see and then how you participate in this.
Well, I kind of basically put my money where my mouth is every morning. They log in and they can watch me basically virtually over my shoulder, and I'm pointing things out as they're happening. And as a trigger or as opportunity exists, I'm telling them this is where you would enter, right here, right now. And they can actually watch it unfold, and they can see whether I was right or whether I was wrong. So it's every day. I'm in the market. And they get to be able to see that every day. The reason why every day, repetition, and to see that it's not a fluke. So every day they get to see it, time in, time out. They get to see every single trade that I call out.
And these are trades that you may get in and out of in the same day. And one of the things that I thought of, because, things have changed over time, but, you hear the word day trading, and then you hear about these rules around day trading. How do you, get in and out of something in a day? Because isn't it like a day trading rule? Like if you buy something, you have to have it for 3 days or something like that. Kind of fill me in on, how you get around that.
Yeah. So the day trading rules are really regulated around stocks, around companies. And so I teach on the EMINI, which actually enables they want you to be in and out in a very short period of time. So rather than having to buy a stock and wait 3-4 days to be able to take advantage of whatever profits are available on an EMINI, you were literally in trades for anywhere between 2 minutes to 20 minutes sometimes up to maybe up to 40 minutes on average. But that's by trading the EMINIs. Not only are you able to avoid that 3-day requirement, but they also have a rule out there where you need to have $25,000 just to simply day trade. And by trading on the EMINIs, you also get to bypass that as well.
So you have a lot more granular control over what you're doing. It's not like you get into a stock and then all of a sudden something goes sideways and you're stuck with it for a few days. You literally can make decisions real time based on what, the signals and the things that you are teaching, that people can do that in a matter of minutes, a matter of hours, maybe throughout the day, where potentially at the end of the day, they have, their trading account, they have nothing at risk on what news may come out overnight or anything like that. They can be completely in and out. Is that correct?
That's 100% correct. And in fact, the reason why they do that is because they want you to second guess yourself. They want you to be your own worst enemy. So something I also get into is a little bit of the psychology side of that to keep you from scaring the market.
Right. And that's where it comes into those emotional trades versus, following the rules. Right. That when you follow the rules, it's much easier to sleep at night, with based on what you're doing than hoping you did the right thing or wondering if you did the right thing. So now, one of the reasons that a lot of people go to financial, portfolio managers, advisors is because of the time. I don't have time to mess with my own trades, or, some people even think, the money, to spend money to educate myself. But the fact is they're spending a lot of money in transaction fees and commissions, whether they realize it or not, because of the way that their money is being moved around in these portfolios. But, talking about the time that is involved to do this, and obviously the reward and the return by spending that amount of time in managing your own portfolio?
Well, yeah, the method behind my madness is I'm in the morning, every morning they get to watch me trade, and I'm trading for about an hour every morning. So about 60 minutes a day is how much I put into it. And realistically, 20 to 30% return on the money you're physically trading is very realistic. So it doesn't require a lot of time to actually trade. It may take a little bit more time as far as how long it takes you to catch up to where you need to be. But time-wise is not a requirement. You don't need to be sitting in front of your computer all day. That's definitely a misconception.
Right. So, and also, I want to make sure it's clear. When you say 20 or 30% return, that's not 20 to 30% return on your portfolio. It's 20 to 30% on the money that you're actively working with in the market that day. So if you decide today I'm going to trade with, I don't know, a number. Let's say I'm going to trade with $5,000 or whatever it is. You're talking about it's not unrealistic or uncommon for people to make 20 to 30% return on that little chunk of that chunk of money that they're using to participate that day. Correct?
That's correct. Once they know what they're doing, making $2,000 off of $5,000 is very realistic, and then doing that a couple of days a week.
So it sounds like not even just managing your money. How many folks turn this into a hobby, that really get into it and enjoy what they're doing?
Yep, it's a great situation, especially if you still have a full-time job. You want to continue that full-time job, and then this becomes more of a secondary income for you. Right.
And so that's not to say that people have to put all their money at risk as they get started and they gain confidence, right? And in fact, you probably advise against that. What is generally your suggestion for people on kind of how to segment or carve off a little piece to learn with as they do this?
If they've had a pretty large portfolio set up, typically set aside anywhere between 5 to 10% of that portfolio, and to put towards the electronic EMINI, and from there, let it grow.
So even if they are with a big portfolio manager and they are uncertain, they could just take a small percentage of that and start doing this to gain confidence in what they're doing, it sounds like.
Absolutely. And it kind of goes back to what we were saying, is where when instead of hoping and praying, they can actually, with the small amount of money that they're trading on their own, they can actually look back and see what trades their broker or fund manager are doing, and they can actually see whether they know what they're doing or not.
Oh, compare and contrast to what they're doing. Yeah, that makes a perfect sense to do that. So, when people are able to do that and take just a small percentage of this to work, and I think one of the big things that I want to make sure and put a spotlight on is the fact that working with what you're doing and learning from you is you're purely an educator, an advocate for their success. You have no financial interest or ties to how much money they start with or how much money they work with, because you're not making decisions or making suggestions based on you making money off of how many trades they make. You're completely out of that whole realm. You're completely different from a typical financial advisor in the fact that you have absolutely no financial benefit over how many trades they make or how much money they're using to invest. Whether they're investing $10,000 or $100,000, it makes no difference to you financially.
None whatsoever.
So I think that right there is, one of the reasons that I definitely consider you an influencer, because that's where people are getting pure information. They're getting pure education on this, and there is no underlying, commission or financial benefit to you on, how much they're investing or how often they are investing or trading, which to me is something that really makes you unique, a unique option for a lot of folks that are wanting to take control of their finances and of their building their wealth. How can they find out more about John Nguyen and this EMINI system?
The website is John's EMINI, so www.johnsEMINI.com. You can find out more information on there, and be happy to see if they're fit.
Okay, perfect. And you have even education for people to see that this, like some webinars and some educational information for people to learn more out there on this, right?
Yeah, if they're really serious about it, and then we can look at getting them some more information and let them kind of see behind the curtains a little bit. Perfect,
fantastic. John Nguyen, I want to thank you for being on Influencers Radio today and sharing this information because this is something that really affects and touches a lot of people right now. And, a lot of people that think their only option is to kind of cross their fingers and put their wealth building in the hands of someone else. And for you to give them the opportunity to take control. And even if they don't do a lot of the trading themselves, at least they understand the fundamentals and the whys of the market. So it really is a great information. So thank you very much for coming on today.
Thanks for having me. I appreciate it.
Folks, there you have it. Definitely check out John's EMINI, JOHNSEMINI.com. We'll have a link there on the show post. And until next time, remember, you are the only real game changer.
You've been listening to Influencers Radio. To get all past shows and updates on future shows, visit influencersradio.com today or follow us on Facebook at facebook.com/influencersradio.